The Australian dollar. AUD recovered part of its earlier losses after the Federal Reserve decided to leave interest rates unchanged. The Fed's decision eased upward pressure on the US dollar, allowing the Australian dollar to rebound as investors adjusted their expectations for future US monetary policy. The Australian dollar is highly sensitive to global risk sentiment and interest rate expectations. With the Federal Reserve signaling a cautious, data-dependent approach, the US dollar weakened slightly, providing support for risk-sensitive currencies like the Aussie. However, gains remained limited as investors continued to monitor Australia's economic outlook and expectations for future Reserve Bank of Australia policy. Looking ahead, the Australian dollar's direction will depend on both domestic and international developments. Strong Australian inflation, employment, or commodity prices could strengthen the case for the Reserve Bank of Australia to maintain a tighter policy stance, supporting the currency. Meanwhile, any signs of slowing global growth or weaker demand from China could weigh on the Aussie. Given Australia's close trade ties with the Chinese economy, for Forex traders, the key events to watch are Reserve Bank of Australia policy meetings, Australian inflation and employment data, Chinese economic indicators, US inflation reports, Federal Reserve decisions, and overall market risk sentiment. These factors will determine whether the Australian dollar extends its recovery or resumes its broader downtrend. Stay informed, manage your risk, and follow for more daily Forex market updates.